Hey traders, I'm going to go through some comments and questions and a little feedback that I've actually gotten on my YouTube channel for the last couple of days, and I just want to walk you through it. So I don't know how long this video is going to be, but hopefully this helps you out. Let's get straight into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Alright, so markets are going nuts. What the hell is going on with these markets? You know, so guys, that's basically what a lot of people are saying, right? I did this video saying, I can't believe this. In this video, I talked about how, you know, what's happening with the markets right now is, it's crazy, right? And here's the thing, I did a lot of people were saying, one guy said that, you know, it's like, John, you know, it's not going down, it's going to keep going up and so on and so forth. Here's the thing, guys. Here's something I want you guys to really listen here for a minute, okay? Oh, by the way, guys, before I start this, if you're interested in, I've just launched 2 coaching spots, 50% off. If you want to get one-on-one personal coaching with me, there's a link in the description. Go check it out if you're interested. Let's get straight back into this now. There's actually a few things, guys, that when you're actually trading the markets, okay? When you're trading the markets, viewing the markets, so I'll do like a technical analysis, right? I'll do like a technical analysis on the markets, and that is my view of what the market's doing. Now, when you trade the markets, you've got to have that risk to reward ratio. You're not going to get every trade right, and all that sort of stuff. You know what I mean? And guys, if you think about this as black and white, trading is actually not that difficult to get ahead in. You have a setup, call it a flag. Just call it a flag. And you're disciplined with that flag every time, and you're going to take twice as much profit as you are risking. And you're not going to risk any more than 2% of your account on one trade. Or call it 1% of your account. Because that's roughly what my stop is. That's roughly what my stop is, about 1% of my account. So that means you're going to have a minimum of 2%. Right? So just say that, right? And so every single time you're going to see a really nice flag, you're going to get in on the confirmation, and you're going to take 100 of those throughout the year. Guess what's going to happen? You're probably going to get maybe 65, 70% of them work out to you 2 to 1. And you're going to get, you know, maybe 30, 35 or a bit more not going to work out. That's the fact of trading, guys. It's not about this one trade's got to make me a lot of money. I've done that before, guys, and trust me, it'll give you grey hairs. So, anyway, that's something I want to talk about. Let's actually get straight into this here. Slot Fever said the Super Bowl indicator and the January month indicator both predicted at least 10% down for the year 2016. I know what you mean by the January indicator. I know what you mean by that, but it's not panning out. You know what? That's, you know, we're still got essentially over a month and a half of action to go. So I don't know. The month's not over yet, and we just had the election. So I think really things are really going to start getting heating up. So planning out the market, Bungie's back higher each time. Unbelievable, like a beach ball. Can't hold it down. I want Trump. I want Trump so he fire little Auntie Janet. What if Trump was assassinated, and what would the market do? Would the market celebrate like a Wizard of Oz when the wicked witch melted? Trump should have more assassination risk with the ISIS taunting. He's building his name in displays for letters, even his little barren boy. I agree with that, by the way, Slot. I really do. I think Donald Trump getting in that, I think there's a lot more risk to this market than what's actually meets the eye. So let's actually just see, you know what I mean? Let's see. I do believe, guys, that over the next 12 months, we're going to see a significant pullback. And the reason why, if you just go study history, that's what history says. So let's just see what happens. I've actually got some way long-term positions to benefit from the market going down. So yeah. What's this one here? Just did my workout. Gold, silver charts are holding support across the board. Daily, weekly, monthly. Feels like all markets are at their proverbial fork point in the road. Still in progress of studying non-directional trading and how to write options, learning time frame, time indicator, etc. Complex stuff. Looking into which program to do some paper trading on, since my banking trade account is too basic. I think, yeah, and I think, oh yeah, and Trump, woohoo. Max, I want to say this here. You don't have to learn all the information about options, and be careful of selling options. Be careful of selling options, because I guarantee you right now, there's probably a ton of people saying, you know what, this market's never gone down. I'm going to sell a ton of put options on this. You know what I mean? And there's probably a lot more people now getting so much more bullish on this markets again right now, because this market's just gone up. So just be careful selling options. The best thing I can say if selling options, which I actually do as well too, what you want to do is you want to do this. One, you want to pick a high volatile time, so you're getting a very high premium. Secondly is you want to try to do it, so if the market runs up a good 10% and just goes vertically, then what I like to do is, because the call options are a lot more expensive, then I'll try to go say 10% out of the money, 6 months out or maybe more, and then I will write that, but I'll write a spread. And then therefore what happens is I'll give myself plenty of time, and then also I'm writing the implied volatility as well too, which is making my options a lot more expensive, and I'm writing them out plenty of months in time. And I've found that to be successful. What generally happens is that when the market has a big run up, good 10, 20%, and just goes vertically move up, just goes up, 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 and up, that means the call options are really expensive, right? That means the call options are really expensive, and so therefore that what happens. Now, generally what happens after a really big volatile period, guess what happens? Well, generally after that, most stocks will go through a nice big pullback, or a couple of month sideways period, and volatility drops through the floor. You have high volatility, low volatility. And so what I would say to that is, in the high volatility, and this is what I do, and it's an awesome cash cow machine, but you've got to be smart. I'm not saying, you've got to have a step-by-step plan too. Make sure you've got good risk management. Not every trade's going to work out too, and you've got to know where to get out. But that's what I do, and I capitalize on the big movement, knowing one. And let me actually just do this here. So one, actually let me bring up my trend line drawing tools. All right, so what happens is this: is that if the markets just go up, and it just absolutely just skyrockets. Have you seen charts like that? And they just absolutely just bam, 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 bam. I love it like that. The reason why is because let me actually do this here again. I'll just show you here again. Let's say the market went up vertically, for like a whole week, or maybe even like a couple of weeks, it just took off, just kept going up and up. There was very little pullback, and just nice big strong move up. What I'll do is, in this case, I like that move, so I will do like 10, maybe even a lot more out of the money. Sometimes even 20% if I can. I'm not after a lot of money, but I'm more after consistency. So then I'll do like 10% out. So 10% out of the money up here. So 10%. 10% sort of my guideline. And then sometimes I will write that option 6 months, even sometimes up to 12 months out. And I'll write that option, but I'll do a spread. Well, I'll sell the call and buy the call, and then keep the change in the middle. The reason why is because therefore I'm protecting myself, and I can write a lot more options. Now again, I'm not telling you that you should do that. You always got to make sure that you're not risking too much on these things, because if it does go through it, then you got to be smart about that. So I have a setup where, if I am wrong, then I'm in a small loss, and it's not going to eat in too much of my profit as well too. So I'll do 10 to 12% out, and think about, and let me actually do like a blue line here for a minute, and think about the blue line as a implied volatility, right? So implied volatility, the market just spikes up a lot. Therefore, these options up here, even though this market's just gone up, and the market's like bam, 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 it's gone up. What happens here is this: is that when the market goes up, these options up here are still really expensive because of the high implied volatility, and plus I'm buying a lot of time value as well too. So when the market does that, and the more and the longer it goes like this, the better I love it. Because just say this happened over, say, let's just call this 3 weeks, right? Let's just say 3 weeks. It just had an enormous move. So 3 weeks. Well, generally, what will happen 3 weeks? Then this will generally go sideways for a month, or it might have a nice pullback and then continue up. So what I've found is when it goes sideways for a month, when that happens, guess what happens? Implied volatility drops. It drops down, and especially if it has a sharp pullback here, well, guess what? The implied volatility for the call options is dropping, and we're getting a sharp pullback. These options here now go down to a place where I'm looking to get out of them. Make sense? So I hope you guys can see, guys. Like I do a lot of different trading in the background. But here's what I do. is I look to get out around about 50% of my profit. So if I made, say, let's just say, for example, I made $1 per contract. You know what I mean? I just said $1 per contract or dollar per trade there. You know what I mean? And let's just say, for example, I had, I don't know, I made, say, I brought in an income of, say, $10,000. Just as an example. Well, I don't like to be greedy, so I'm doing this situation and writing it, and then when the volatility, when it goes sideways, or it has a nice pullback, most of the time what I do is I have orders in there to get me out at 50%. So therefore I close the trade out, make $5,000 as an example. That's 5,000. Make $5,000. So I'll make $5,000. You know, and then I'll keep that $5,000 as the income, and then I'll go find another stock that does that. And then I'm looking for these stocks, and that's what I'm doing with my research. And I found that to work quite well. The thing you want to look out for is that if it does go against you, so if this thing just keeps going up and up and up and up, I have what I call my break-even point. My break-even point. And so generally I'll get out of there with a bit of brokerage, a bit of slippage, and I might be down a little bit. You know what I mean? Depending how fast the market moves. So there's just some guidelines to use. Again, you just make sure you paper trade and make sure you understand what you're doing. There's no guarantees to this. You still can lose a lot of money because it just goes straight up like that. Then yeah, you're probably going to lose you're probably going to lose the maximum risk that you have with the selling of options and buying of options. Make sense? So anyway, I hope that helps you out, Max. As you can see, I do a lot of trading myself in the background that you guys don't realize. I just do like a market update. So. And I said, what did I say here? All it's going to be a one hell of a volatile month, I believe, for another couple of months. Kind of annoying listening to you work out. Anyone else? No, not me, Suan. I actually hope that me doing that in the gym, it actually allows me to think. So if you don't like it, Suzanne, then you know what? Unsubscribe, go somewhere else. Question for those that lost on the VIX. Did you know about the zero hedge article? Here's the thing, Here's the thing about that. What's that zero hedge article talk about? Is this the one that I think it is? Yeah, I've seen this one here before. You know what? I don't really worry about that. If you're not too comfortable trading the VIX, then don't trade the VIX. Yes, there's losses on, like if you got into the VIX when the market was up already, like if it went up, then you got to be smart about that. I got into the VIX when it was down at like 12, 13. That's when I got into the VIX. So even though the VIX spiked up to 20 or something like that, and then has a pullback. Yes, my account, that trade is in a loss, but it's not in a big loss because I got in when it was down there at 12. You know what I mean? 12, 13, somewhere around there. So, you got to be, every single trade, you don't just get into VIX because you think it's going to spike. You know, you've got to be smart about that. Even if I think the VIX is going to spike, I'm still waiting for it to pull back to a good place. All right, so as a scalper, picking the top is my game. Is it? Cool. It only cost me $50 a go. In swing and long-term trading, picking the top can be expensive. Smart long-term traders go short on the first pull back. And then BTFTS all the way down. I'm not sure what that means, but I'm sure it like get on down. Wes says, oh West, how you doing, West? Good to see you back again on my channel. I'm great to see you here. It's uncanny how many times over the past year that as soon as you get excited about when the market actually starts to go in the direction you pick, that they completely reverse the course that you surprise. Really, West? Really? That's interesting. Because did you know I've been short and bearish for the last few months, and I've been enjoying this market going down? Did you know that? Where have you been for the last few months, Wes? Interesting. Something to think about, my friend. You know, yes, the market has gone up, but I didn't really get. I just said, you know what? Who knows what's going to happen here? So it's uncanny. It's uncanny how you just like to pick and choose your directions, your feelings through there. So my friend, you know, Wes, it's the market is a very volatile game, and you've got to be smart about the way you trade it. You know, it's just the way it is. But yeah, I have been bearish in this market, and you know what? It's really interesting, Wes, that I've been bearish for the last few months, and you've disappeared when the market has come down. We have 2 or 3 really good up days, and you come in saying nyeh, 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 nyeh. So I'm not going to block your ass because I'm just going to lay it a comment because you know it's a free country. So 20k Dow is coming. Happy trading months, guys. If it is, cool, because I got a non-directional play on both the S&P and the QQQ. So if it goes up, guess what? I'm going to make a fortune from it if it does that. The bond markets created. All right, so here's Bob. John, sorry, but not so smart. Oh, really? Oh, I'm sorry, Bob. Oh, I'm not so smart. Actually, I didn't pretend to be smart. I can't even spell or do grammar properly. If you get in the VIX, let's say 15, wrong. I got in at 12. I'm smarter than that. I wouldn't get in at 15. And then watch it go to 23 and then go back down to 15. That's a loser. Yeah, I know that. But guess what? I didn't get in at 15. I got in at 12 and 13. And I've just been down there and I've had long-term options and the time decay's been slowly hitting me. And yes, it went up to 23 and now it's come back down again to 15. And I'm in a small loss, but not that big of a loss, maybe 5 or 10% loss or something. About 10 or 15% loss, somewhere around there in total. 10 to 20% loss, somewhere around there. I can't remember. But I'm not too worried about it. You know what I mean? You got to bank the profits, or at least some of them. Really, Bob? Really? Cool. Well, again, Bob, you know, you have to trade your plan, right? My plan in the VIX is to do what I've been doing. It's like nothing there. You did the same thing in silver. 14 to 20 to 17 is a loser. Bumper. Wrong again, because my silver is actually still in profits. Got to bank some profit. As you keep saying, we never know what will happen. I got 40 years of pro trading experience. Cheers. Well, Bob, if you got 40 years of trading experience, then please start a channel so we all can follow you, so we can show you, so you can see exactly what we're doing, what you're doing then. Really, really interesting, Bob. So please start your channel and put a link to it and start doing your market updates so we can watch it as well too. Here's the thing that I do say, Bob. You are so good at hindsight. Oh, John, look at it. The VIX went up to 23, then went back to 15. Bob, you would not be saying that if the VIX went up to 30. What if silver kept going to $23, $30? You would not be saying that because you don't know. All I do know, Bob, is every trade I get into, I have a detailed plan. With my silver position, silver R, because I'm an Aussie, silver R. With my silver position, I have a plan for that. It's not a get in and get out. It's not a get in and see the market go up 10, 20% and get out. No, I'm not trading that. I'm investing in that. With the VIX, I have a long-term view with that. And I'm accepting the fact that it could be a loser. I'll just keep rolling it out and so on and so forth. But you got to be, you know, Bob, you know, for you, my friend, if you've been trading for 40 years, you would know that at the end of the day, when it comes down to, you know, trading and stuff like that, that you're never going to pick the top, you're never going to pick the bottom. You, my friend, come in and say, oh, look what the market did. You need to bank your profits. So, Bob, I actually think you're cranky for some reason. Did you have a losing trade, Bob? Did you? Because like you saying 15 is a loser and a loser. It's like, Bob, you cranky, are you? And as I said down here, lol, Bob, I guess you no longer need to watch my videos anymore. Again, Bob, you know, if you're so good at trading, then please start your channel. Let us all watch you get in, and you tell us exactly when to get out. You tell us exactly where that top is, because it seems like you know where that top is. Again, I have as you can see from this video, I have positions on, but I do a lot of other positions. I do a lot of other trading that you guys don't see. I just tell you guys a few trades that I'm in. So, in any event, guys, that's it for me. What the hell is going on with these markets? Basically, a lot of people saying, you know, John, that's a loser. I might title the video that. That'll be pretty cool. So anyway, guys, that's it for me. Hope you enjoyed this. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today. I'm not going to BS you here. Trading is hard. Over my 10 years of trading, I've learned some amazing systems and strategies, and I've put it all in my brand new Grab the Markets by the Balls course. And I'm giving you 100% free access. This whole course is 12 videos long and almost 10 hours of the best systems and strategies that I know. Click on the image below now to get 100% free access right now.